Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, March 10th, and this is episode number 90. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. As always, nothing in today's video intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, thank you again for tuning in. I really do appreciate each and every one of you. I can't believe this is already episode 90. It doesn't feel like we've been doing this for very long, but obviously we've built up quite an audience here on this channel, and I'm so grateful for it. And thank you for all of you and your wonderful comments and support. I really do appreciate it. If you do enjoy this content, please like this video, subscribe to the channel, hit the notification bell. You will be notified whenever we publish a new episode, which is just about every day. Before we get into the content of today's video, a couple pieces of housekeeping. One, if you are a member of Uranium Insider Pro, our paid newsletter, we did put out a video last night going over some of the developments that happened yesterday more in depth, my expectation on those developments, and of course, some granular detail on our conversation with John Ciampaglia, the CEO of Sprott, that we had yesterday morning that I mentioned yesterday as well. That video has been posted. You should have received an email last night notifying you of this video. If you did not see that yet, I highly suggest you go and log in and watch it. It's right at the very top of the members area of our website. If you are not a member of Uranium Insider Pro and you're curious about the type of content we put out, click the link in the description below and you'll receive a sample newsletter from a previous month. Of course, as a member, you not only will receive newsletters similar to that sample, but you will also have intermonth bulletins that will notify you of trade alerts. These are buy or sell alerts, new positions, trading out of positions, macro moving content on the macro side in terms of fundamentals and news. And of course, access to our members only webinars and our focus list, our holdings in the space. You will also get access to all of our previous content. And notably, we do have a quarterly membership option now. So it's not only annual, you can subscribe for a 3-month period. Again, if you're interested, click the link in the description. You will get a sample of the previous month's newsletter. All right, with that out of the way, let's jump into the daily scoreboard with an absolutely monstrous move in the spot price of uranium after hours yesterday. The spot price currently is now sitting at $59.75 a pound, jumping over $6 from yesterday. This is more than a 10% move since yesterday's Uranium Market Minute. Absolutely huge. This, of course, came on the heels of rumors that are news, really, that the White House was considering sanctioning Rosatom, which is the primary uranium and nuclear state-owned company in Russia. So that news we have yet to actually confirm, although it continues to kind of flow out various, not necessarily reliable sources about this particular issue. So that is not yet confirmed, which is why I think we didn't have huge follow through with the equities based on the spot price move, but clearly we did see some panic buying in the spot market after that news came out yesterday. Yesterday, Spot raised another 25 million in new capital, purchased another 100,000 pounds. That puts their total trust holdings to 50.4 million pounds of uranium. Year to date, they've purchased 9.1 million pounds, and they've raised $538.7 million just over 10 weeks. Absolutely phenomenal. They closed at a premium to NAV of 2.22%, but with a huge move in the spot price of uranium last night, even though they gapped up and traded heavily today, I don't believe they were sitting at that sufficient 1% premium throughout the entirety of the day, but big moves late in the day, they likely were back in the market, issuing more shares, raising more capital. The ETFs, if we look at the ETFs, URA and URNM, another big issuance of shares outstanding. 950,000 new shares for URA, 275,000 new shares for URNM. That led to mandated buying of 39.4 million new buying. Again, as I continue to repeat, almost every day, money continues to flow into the sector and on very significant volume, as we'll see just in a moment. Obviously, yesterday, late in the day, we had big moves in the equities on the back of that news of potential sanctions against Rosatom. And the equities followed through today, didn't sell off from those gains. However, they weren't up that big, but SPUT really stole the show today. So let's take a look at the charts on that note. So URA up 1.34% on the day. This is as of the close half an hour ago. Absolutely huge volume. This looks like probably the third highest daily trading volume ever for this ETF. Very, very big volume. I honestly expected to see a larger movement in the price of this ETF, but huge volume and positive for the day. Not complaining about that. Like I mentioned, U.UN, the Sprott Physical Uranium Trust, absolutely, again, just up on stilts. Very big volume. Volume came in heavily at the end of the day as well. This was up over 8% on the day. Of course, this is tracking spot price of uranium for the most part, but what an outperformance by this one. It does look to me like the equities are not quite believing the news yet, and maybe that's justly so. So we should hear some kind of confirmation, whether that's from U.S. actually sanctioning Rosatom or from the commodity being cut off. And I think that the equities markets want to hear confirmation on that either way, or see a continuance of this movement in the spot price. Either way, we are at a 10-year high for the spot price of uranium, and the bull market is fully intact here. All right, for the mailbag section, obviously everybody wants to talk geopolitics. I don't want to talk that much more about it, but I will just mention a couple of pieces that it does seem to me like what we're seeing in the spot market in terms of the buying is on the back of that news. And of course, this was after hours. We're seeing that Spot is buying smaller volumes of uranium day over day, and they're building up a massive cash position here. So what does that mean? That means that buying that happened late in the day yesterday wasn't coming from Spot. All right, so that means that there's other entities in the space that are trying to cover, at least in the short term, likely because they might have some potential disruptions to supply due to the Russian situation. It's also likely that there are traders entering into the spot market expecting much higher prices if this continues to play out. Now, again, I have mentioned over and over and over that we are not long uranium because Russia is invading Ukraine and is potentially going to be sanctioned. That is not why we're long. We are not long because of shipping issues potentially with uranium deliveries globally coming from Kazakhstan, coming from Russia. We're not long because Putin might cut off the export of raw materials, potentially including uranium. There's not reasons why we're long. We're long because there's a massive supply deficit this year. Look, going into next year, it tends to sort of balance out after that. But of course, that's just a snapshot. We're not looking at the long term where we start to get very uncovered in terms of the utilities and in terms of the overall structural supply and demand situation out towards the end of the decade. And if you know anything about the nuclear fuel markets, 5 years from now is basically tomorrow. Nuclear utilities look to cover far out into the future. And of course, we are hearing there's multiple utilities, especially in the States, that are really not all that covered. And we're not expecting this type of rapid price change in the spot price. So this is really shaking up the industry right now. And the effects of that are yet to be felt in terms of the rest of the fuel cycle, UF6, EUP, SWU, and of course, fuel fabrication, all of those other elements. Whenever one element of the fuel cycle moves up sharply, typically it affects the rest. Now, what we're seeing right now, of course, is what the equities generally track is the spot price. Spot price is the most visible reported price that is almost reported in real time by entities such as Numerico, which you can subscribe. You can create a free account and have access to their price reporting. UXC doesn't report real time, but they do report on all of the elements of the fuel cycle, including the spot price, UF6, EUP, SWU, etc. You can create a free account there at uxc.com. And also the Numerico account on Twitter is probably the most easy and transparent, close to real-time reporting of the spot U308 price of uranium. And that's what the investors tend to watch. But we have all of these elements of the fuel cycle that are also all in an uptrend. SWU is at a multi-year high and continues to move up. I expect we will see that bump up by another $1 or $2 in the month-end reporting. SWU is only reported every 30 days. So all of these elements of the fuel cycle are in an uptrend. And how, I get often questions. People are always wanting to make price targets. I don't like doing price targets. Nobody knows these things. And I think it's just a fool's errand to shoot for a price target. However, whenever I'm asked Justin, how high do you think the uranium price can go? I generally just tend to say higher. And what the basic thesis is you have, in order to have the market reach some level of equilibrium in the next, let's say, 3 to 5 years, what we're going to have is projects that are on the margin, especially kind of in the 5-year term, on the marginal production cost curve. So these are projects that are in the 65, 75 and higher price range to develop the projects. Those are going to need to come online in order to achieve a balanced market. So if we make assumptions about the continued growth of the nuclear industry, the continued reliance on the existing nuclear fleet for the most part around the globe to continue to provide that baseload clean energy, then we would expect that demand, let's say, outlook for that time period will tend to be in that ballpark. Therefore, these projects that are on the margin will need to be in production. That's the thesis for the price needing to rise to around that level. Okay, and that price continues to rise when we continue to see CPI prints of 7.9, when the real, the real inflation numbers in the real world are absolutely huge. They're talking 7.9% CPI. I paid almost $7 for gasoline yesterday, which is almost double what I paid about 6 or 8 months ago. So don't tell me 8% inflation. That's 100% on gasoline. So these real world things are absolutely real, and they affect the cost of development of mines. Okay. You have to take into account the cost of diesel fuel. You have to take into account labor shortages. You have to take into account material shortages. I was speaking with a company in the uranium mining space that's seeking out products to get their mines ready for ISR production. They're having trouble finding PVC for piping, for casing of these wells. These things affect costs. And so basically the short answer is, how high are prices going to go? Well, we know they're going at least to that marginal cost of production. And like I said, that marginal cost of production was in the 60s, 18 months ago. We're probably talking about 80s now at this point. So we've got another 25, 35% move that's practically guaranteed here. But of course, we know that what's really moving this market currently is the financialization. And the money is coming into spot like crazy. It's coming into spot like crazy. And there are financial entities out there that are aware of this vehicle. They're aware of this thesis, and they cannot touch it until the liquidity increases. So who knows how much money is on the sidelines? I think we're talking billions in terms of institutional money that is waiting for sufficient liquidity to enter this market. And that's just going to keep driving the spot price higher. And I think that we could go on a real strong run. Of course, it's going to take confirmation and follow through on this. When you see the spot price spike on a news headline that doesn't get confirmed, the equities don't want to follow that. If that is confirmed, and or we see a continued firm price or rising price in the spot market, the equities will catch up. We've already seen a decoupling from the broad market that is likely to continue. Like I said, I'm very constructive on the market here. And I know because I do this daily podcast, we tend to talk about short-term elements. I'm honestly not thinking much about this Russia situation in terms of sanctions, etc. That's not the primary thesis. We still have a mid to long-term outlook for this market. Is there a chance that there could be a fast price spike in the shorter term if we do see actual sanctions? Absolutely. That is on the table. But again, that's not why we're here. That's not what we're betting on. We're not trading around it. We are positioned in a way that is definitely benefiting from it, but it's not the core thesis. And so I try not to focus on that in terms of the day-to-day noise, but of course, that's what we're interested in. We do a daily podcast here. So that's why we cover these day-to-day pieces of news that come around that do affect the markets. And clearly we're seeing follow through in the price of uranium based on these headlines. So there does seem to be players in the nuclear fuel market that are taking this seriously. So that's something that's a tell right there again, right? So even though the headline was the White House is considering sanctions on Rosatom, the fact that that's an official government press release, essentially, or an official government statement, let's say, that's taking this into consideration. There are some players within the nuclear fuel cycle that took that seriously enough to do some panic buying last night. That's another tell. So very, very, very constructive on things here. And this is just like I said yesterday, this is just a market ripe for disruption. So even if things dissipated tomorrow, which obviously I don't believe that they will, But if we reach peace agreements tomorrow, are we going back to normal? Is all of a sudden it's going to be just okay for everyone to buy from Russia again? I don't really know. I mean, I tend to think that's not all that likely. All right, all that is to say that very excited and constructive here, and I was pleased to see the gains of yesterday not at least see much profit taking. There was some profit taking. That probably is what kept a lid on the big price movements for the equities. But of course, spot just stealing the show with massive inflows and big volumes in the ETFs too. So we'll probably see big share issuances coming from URA and probably a bit from URNM as well in the next couple of days. All right. Hope everybody's well. Take care, and we will see you tomorrow. Cheers.